Hello and welcome to Investment Insight. Before we begin, make sure to subscribe and hit the like button. Now let's break down what's happening in the markets today in a clear and simple way. So, as an everyday American investor, global markets can sometimes feel like this giant, confusing maze of jargon.
Oh, absolutely. It can be super overwhelming if you don't do this every single day.
Right. But our mission for this deep dive is to cut through all that noise. Today, we're decoding two massive international stories, and they both show how global giants are navigating, and in some cases, completely bypassing, the traditional U.S.-centric financial and technological systems.
Yeah, it's a fascinating shift to watch. I mean, we are looking at a fundamental rewiring of how business gets done globally.
Exactly. First, we'll look at why Chinese tech giants are suddenly borrowing billions of dollars in a currency other than the U.S. dollar. They're doing this using something called dim sum bonds.
Which is honestly a great name for a financial instrument.
It really is. And second, we're going to unpack a massive Hollywood-style smuggling scandal. We are talking billions of dollars in U.S. AI chips, fake servers, and literally a commercial hairdryer.
The hairdryer detail is it's wild. It's my favorite part of the whole story.
I know, it sounds like a movie script.
Yeah.
But let's start with the financial side of things. So what exactly is a dim sum bond? To make it simple, imagine you frequently visit a foreign country for business. Let's say you go to Europe a lot.
Okay, sure.
Instead of constantly paying those high exchange fees to convert your U.S. dollars every single time you need to buy a coffee or pay a vendor, you eventually just open a local European bank account and borrow in euros.
Right, because it just makes financial sense. You save a ton on fees.
Exactly. That is essentially what a dim sum bond is. It's a bond issued outside of mainland China, usually in Hong Kong, but it's priced in Chinese yuan instead of U.S. dollars.
And according to recent analysis, this market is just exploding right now. I mean, Hong Kong currently handles over 70% of global offshore yuan payments.
Wait, 70%? That is a huge chunk.
Yeah, the scale is staggering. Data shows there is roughly 1 trillion yuan in deposits sitting in Hong Kong right now, and about 1 trillion yuan in annual dim sum bond issuance.
1 trillion. Just to ground that for the everyday investor, we are talking about hundreds of billions of U.S. dollars in equivalent value, just circulating entirely outside the U.S. dollar banking system.
Exactly. And we aren't just talking about small regional businesses doing this. We're talking about the biggest tech behemoths on the planet.
Right. Recent data highlights some major moves here. Like in September of 2025, Tencent issued a massive 9 billion yuan in dim sum bonds, and the maturities on those stretch out up to 30 years.
Wow, 30 years. That's a serious commitment.
Yeah. And then in November 2024, Alibaba issued 17 billion yuan in offshore bonds, stretching out to 20 years.
You know, the time frame on those bonds is what you really need to pay attention to. When a company borrows money for 20 or 30 years and global investors are willing to lock their money up for that long, it's a massive signal of market confidence.
Okay, but I have to play the skeptic here for a second. Let's be real. Why are they doing this? Is it just because it's cheaper to borrow money this way right now, like refinancing a mortgage when rates drop? Or is there a bigger master plan at play?
That is the million-dollar question. Or I guess the billion yuan question. But no, it's much deeper than just hunting for cheap interest rates. Recent research shows this is actually a structural shift in corporate finance.
How so? What's driving the shift?
Well, nearly a quarter of companies with existing yuan exposure plan to increase their borrowing in yuan over the next 3 years. They are doing this to match their debts to their actual revenues.
Oh, I see. So if they make their money selling products in yuan, they want the money they owe the bank to also be in yuan.
Exactly. It's all about avoiding currency risk. Imagine you run a business in China and all your customers pay you in yuan, but you borrowed 100 million US dollars to build your factory.
Right. So you have to constantly convert your cash.
Yep. Every month you have to go to the foreign exchange market, buy US dollars, and pay your bondholders. If the US dollar suddenly surges in value, overnight, it costs you way more yuan just to pay the exact same debt.
So your underlying business could be doing great, but you still go bankrupt just because the exchange rate moved against you.
Precisely. By issuing dim sum bonds, these companies are completely eliminating that currency risk. They're insulating their balance sheets from the mood swings of the US dollar.
That makes perfect sense. But they aren't just building this alternative financial highway on their own, right? The government is actively paving the road for them.
Oh, absolutely. The People's Bank of China and the Hong Kong Monetary Authority are actively expanding the plumbing of this market.
When you say plumbing, you mean the actual financial infrastructure.
Yeah, Exactly. For instance, they recently doubled their lending facilities to 200 billion yuan. They essentially told the banks, here is a massive pool of cash, go lend this out.
So they're greasing the wheels to make sure borrowing in yuan is just as frictionless as borrowing in dollars. But why does this matter to, say, someone managing their retirement portfolio in Ohio?
It matters because it's a real-time look at how global portfolios are diversifying away from dollar dominance. As an American investor, you're used to the dollar being the undisputed king.
Right, which gives the U.S. incredible economic leverage globally.
Exactly. But what we're seeing is the world slowly building an alternative route. It's not a pure bet on the Chinese currency getting stronger. It's just about having options if the dollar system experiences a shock.
Okay, so we just saw how Chinese companies are legally building a financial workaround to avoid relying on the U.S. dollar. But when it comes to the physical technology that runs the modern world, specifically AI chips relying less on the U.S., isn't really an option.
No, it's definitely not. American-designed AI chips are the absolute lifeblood of the future economy right now.
Right. In fact, the demand is so desperate that some players are turning to massive, illegal workarounds to get their hands on American hardware. Which brings us to our second story.
The heist?
Yes, the heist. So, based on a March 19, 2026 Department of Justice indictment, 3 individuals were charged. And one of them is Wally Laya, the co-founder of Supermicro.
Which is a massive, publicly traded American enterprise server company.
Exactly. And the charge is smuggling over $2.5 billion worth of highly advanced U.S.-assembled AI servers into China. This is a direct violation of U.S. export controls designed to protect national security.
The sheer audacity of this operation is what really stands out to me.
I know, it's literally like a Hollywood heist movie. They acted like bank robbers stealing a getaway car and immediately swapping the license plates in a dark alley so the cops couldn't track them.
Yeah, only they were doing it with billions of dollars of enterprise technology.
Right. The data indicates they didn't just forge paperwork. They routed these massive servers through Taiwan and into Southeast Asia, using transit hubs like Malaysia and Singapore.
And this is where it gets incredibly physical. We aren't talking about smuggling some laptops in a backpack. These are massive, heavy enterprise server racks.
Right, and when compliance officers or auditors came to inspect the inventory in Malaysia, the smugglers actually had a system ready. They set up broken dummy servers as decoys.
This is where the hairdryer comes in, right?
Yes. The indictment mentions that security cameras caught them using commercial hairdryers to heat up and peel the serial number labels off the real AI servers.
That is just, it's unbelievable.
Right. And then they would stick those authentic serial numbers onto the fake, empty dummy servers. So the auditor checks the barcode, logs it, and thinks everything is safe in Malaysia.
Meanwhile, the actual $2.5 billion worth of hardware is already on a cargo ship bound for China. It's a phenomenal level of logistical deception.
But wait a minute, let me push back here. How does a massive tech company essentially just lose $2.5 billion worth of cutting-edge inventory? Like, how does the stock market react to a company basically admitting they don't know where their flagship products went?
Oh, the market reaction was absolute panic. When this news hit, Supermicro's stock plummeted 28% in a single day.
Wow, 28%.
Yeah, that wiped out $5 billion in market value instantly. But you have to understand, that drop wasn't just about the smuggling ring itself.
What else was it about then?
It's what we call a compliance premium issue. Investors panicked because this company already had a history of massive red flags.
Like what kind of red flags?
Well, they had delayed their annual report, and then their auditor, EY, outright resigned over governance and transparency concerns.
Ouch. Yeah, when your auditor resigns, that is the ultimate financial red flag.
Yeah.
It basically tells the market that the company's internal paperwork is fundamentally untrustworthy.
Exactly. In the hardware business, you can't officially recognize revenue until the product is delivered to the end user. If your supply chain is a black box, the auditor can't verify the revenue.
So investors saw the smoke when the auditor resigned, and the DOJ indictment was just the explosion.
Precisely. And you can see this in how competitors performed. On the exact same day, Supermicro lost 28%. Dell's stock actually rose 6%.
Oh, wow. So investors just moved their money to a safer bet.
Yeah. Investors desperately want exposure to the AI boom, but they want it with lower regulatory risk.
That makes sense. But zooming out to the geopolitical picture, this isn't happening in a vacuum. Southeast Asia is becoming a major transit hub for tech smuggling.
It is. It's a critical vulnerability in the U.S. technology strategy right now.
And in response, current U.S. President Trump and his administration are reportedly considering some very strict new export rules to plug these holes, right?
Yes. Policy analysis indicates the administration is looking at demanding formal security guarantees. They might even require foreign buyers to make reciprocal U.S. investments just to get permission to buy these chips.
Let's unpack that. What does a security guarantee actually look like? Are they going to put U.S. inspectors in foreign data centers?
That is exactly the kind of extreme transparency they are pushing for. But the challenge is the nature of cloud computing.
Right, because an AI server isn't just sitting in a locked room, it's connected to the internet.
Exactly. You could have a server physically sitting in a secure facility in Singapore, totally complying with U.S. law. But once it's plugged in, a user in another country can simply rent the computing power over the internet.
So you can put a lock on the server room door, but you can't really put a lock on the Wi-Fi.
Precisely. And that loophole is why the U.S. government is trying to force the entire global supply chain to be totally transparent.
So for the everyday investor listening right now, what is the ultimate takeaway here?
The takeaway is that when you evaluate AI companies now, it's no longer just about who makes the fastest chip. Compliance is the new valuation factor.
Right. If a company can't prove exactly where its servers are going, its stock is going to suffer massive discounts.
Exactly. Regulatory risk is just too high to ignore now.
So just to recap what we've covered today, we're watching a real-time restructuring of global power across two different battlefields.
You really are.
On the financial side, companies are using dim sum bonds to legally sidestep the U.S. dollar. And on the hardware side, black markets are going to insane lengths, like using hairdryers on serial numbers to illegally sidestep U.S. AI export controls.
It paints a very vivid picture of the push and pull of global influence right now.
It really does. Which leaves you, the listener, with a final, provocative question to ponder. If the U.S. dollar's absolute grip on global finance slowly loosens, while the U.S. government simultaneously tightens its absolute grip on the world's most critical AI hardware, which kind of power will ultimately dictate the next decade of the global economy?
That is the defining economic puzzle of our time. Will it be the countries that control the flow of the money or the countries that control the compute power of the microchips?
Don't forget to subscribe and hit that like button.